Welcome to Share Views, brought to you by London South East. My name's Ed Bowsher, and in this edition, we're going to find out more about TransGlobe Energy with the company's CEO, Ross Clarkson. So, Ross, thanks very much for joining us on this edition.
Thank you very much for having me, Ed.
So, can you just start with a brief outline of what TransGlobe Energy actually does?
TransGlobe is an upstream oil and gas producer, primarily oil, focused in Egypt and the Middle East. We also have a small portion of assets in Canada. We go out and explore for, drill, and produce oil and gas.
Now, I know you're listed in Toronto and on NASDAQ as well, and you said you might be coming to list in London on top of that. Why are you considering listing here in London?
We've discovered that there's a great number of funds in both the UK and Europe and in Africa, Middle East, that really have not seen us and not have access to our shares because they don't generally invest in a North American listed company. So we're trying to access a broader share base.
And you think that might help boost the share price in the long term, I guess?
Well, I certainly hope so.
All right.
That is the objective.
Okay. Now, you're primarily operating in Egypt. I know you've been there for 13 years. What are some of the attractions of Egypt for you? Why are you operating there?
Well, Egypt's been in the oil and gas business over 60 years, and so they have a very well-established system for awarding licenses and essentially monitoring and running the oil business. So it's quite friendly to smaller companies. It's getting to a little bit more mature side, so some of the larger fields are not there, so, except maybe in the offshore, so it's quite attractive to smaller companies. And there's a fair bit of deal flow, so there's turnover of assets.
I think a lot of investors worry about Egypt. They think it's politically unstable. Of course, we had the coup just a few years ago. Has this political instability affected your business so far, and how could you reassure people that it won't affect you in the future?
Well, it really hasn't affected us operationally. We kept 5 rigs going all through the revolution period and really are dealing with the same government bureaucrats, so there really hasn't been a big change. They did get financially strapped as they came through this change, and that did stretch out receivables for companies, but at this point we are exporting our own crude, so we really don't have that issue. So for us, and economically, over the last 2 years, Egypt's status has really been coming up a lot. So it's actually a pretty attractive place right now in the Middle East.
But I guess if there's more instability, there's the risk that the government might seize your assets or just make life more difficult for you.
Well, in my lifetime, I have never seen that happen in a production sharing arrangement like we've seen in Egypt. I've never seen it happen in Egypt. They desperately need foreign investment, and if they seize assets, it's a rather short-term solution, and long-term they would suffer.
Now, you mentioned you have a production sharing agreement in Egypt. Can you explain what that is, how it works, and how it affects your business?
Essentially, we split the oil barrels that we produce with the government, and some of those that split goes to the government and pays the taxes and royalties that we would normally pay in a normal situation in North America. We take our barrels in kind and sell them on the international market. So it's not that different than a system in the West. It's just really splitting the barrels versus splitting the dollars after you sell the barrels.
Now, you also have a business in Canada. I know you pulled out of Canada a few years ago, and then last year you bought some assets in Canada again. What made you decide to go back into what is your business's home country?
Well, it was easy for starters to add because the assets are only 40 minutes north of my office. But also, we look for opportunities to add value, and quite frankly, Canada 4 years ago was too expensive. Most of the assets were too expensive. And
is that when you pulled out then?
We pulled out 7 years ago. When we came back to look at it, we saw a lot of opportunity. There were a lot of stressed companies and assets selling at very attractive valuations. And we found a set of assets that were very oily and had a lot of undrilled locations basically coming from a company that was essentially bankrupt. So we bought them for a good price, and we're also very good at applying technology and extracting more oil out of the ground. And we've drilled 3 wells so far this summer, and we're about to complete those wells and put them on production in the next 2 weeks. We have a lot of optimism that we're going to do better than the previous operators.
Now, I think you're already producing something like 16,000 barrels a day. That's oil and gas. But you're not making a profit yet. What's going to get you over the line? What's going to get you into the black?
Well, we are making positive cash flow at these prices. Profitability, certainly we need oil prices, Brent prices, to hold above $50 to get us to profitability. When we get down into the 40s, we're making free cash flow, but we're not making enough to cover all of the costs. And this is not that different from most oil companies. We really all get back to real profitability, and I'm talking full cycle profitability, when we get into the 50s.
Now, obviously, you're doing a lot of exploration work in Egypt at the moment. Is that another big cost for you? Is that exploration work stopping the move into the black?
No, most of our exploration work is now completed, and we're moving into a development phase on our assets. We found a number of new oil fields, and we're now in the stage of developing those oil fields and increasing production. We have a little bit of exploration committed for next year, but it's a smaller percentage of our budget now, by far.
And that development work is obviously a lot lower risk than the exploration work.
Well, essentially, yes, it's found oil. It's just really all the mechanics of getting it on stream. It's very low risk.
But sometimes when you're in that stage, you do find you've got the oil, but there are still practical problems about getting the oil out. So it's not an 100% certainty yet, or is it?
Pretty close.
Pretty
because
close.
It's
Okay.
not technically all that difficult.
Okay. Now, the share price has fallen a long way over the last year or so, down something like 40%. What are the things that might start to move the share price back up again? Is it simply just the oil price, or is it reassuring people about Egypt, or are there other things in the pipeline that could help?
Well, certainly a return to free cash flow, which we demonstrated in Q2 and we'll see again in Q3 and Q4, that gives people the confidence. We've done a lot of cost cutting, and we've really streamlined our business to get back to free cash flow, and then ultimately profitability. That will help. We've also got a couple of projects that are very key to our growth pattern, and one is in the Western Desert in Egypt that's light oil that's going to have a high netback, and the other one is in Canada, which is also light oil that's going to have a netback. Both those projects are happening right now. And so through this fall, as we go into the winter, we'll see an increase in production and an increase in the netback we get on a barrel of oil. That is going to change people's minds.
Now, you mentioned clearly the oil price is crucial. What's your best guess as to what might happen to the oil price in the next couple of years?
I see a slow climb out. I mean, we've gone through a hard 3 years of readjusting the supply and demand equation. Just this week, the EIA came out and talked about increased demand. They increased all of their estimates on demand. Demand continues to grow. Supply is shrinking because of the lack of investment. That's the big thing. And if OPEC and Russia hold together, it's just a big if, I think that next year we could see maybe a 55 floor on the price on Brent. But I'm not predicting $80 anytime soon.
Sure. And you talk about demand. In the longer term, which I mean 10, 20 years, is there not a risk that demand could fall as we move more into renewables, concerns about climate change rise? And if we did see a big fall in demand, maybe all the found oil we know about now, maybe it won't all be used in the end.
That's certainly a possibility on the distant horizon. I tend to think in terms of an investment cycle of 5 to 7 years, and I don't see that happening in 5 to 7 years. But certainly if we look out 10 or 15 or 20, yes, there could be a change in the overall consumption of petroleum. We're still going to need it. There's no question we will still need it. There's too many plastics and other things, and all of the EV cars have to be manufactured out of oil and gas, essentially.
Well, that's it for this edition of Share Views. My thanks to Ross Clarkson from TransGlobe Energy, and thanks to you for watching. This has been Share Views, brought to you by London South East.